let's get more on what's moving the US dollar, and how this will impact global currencies. Lucas Santos from ACY Security joins me now. So, of course, the Trump trade, factored in now. It's been a week since we've known this, but still seeing a lot of support for the greenback.
Well, good morning, first of all. Long time I didn't see you here. Good morning, everyone. It's Friday, and the month is flying through. So, yes, US dollar has been so strong from last week to this week. It's no joking. And we saw the whole month of October pretty much with the DXY raising week after week, day after day. I was looking at the Bloomberg terminal yesterday before I left the office, and I saw that the US dollar has been raising for 7 weeks consecutively. And, that has been dragging down or poor Australian dollar. Very interesting what you've mentioned about the Trump. Yes, Trump, there is, huge effect on that US dollar strength. And we were somewhat expecting that already to happen, right? Because we know that there's a big difference from Kamala Harris and Trump. I'm not trying to be one-sided here, but I'm just trying to say, Trump does bring more economy prosperous for USA than Kamala Harris. It's clear.
Well, at least that's what the market is suggesting.
Yeah,
right?
it's clear, and that's what the market is suggesting. So I do believe that the Trump trade can sort of extend until end of this year, but we have to be very careful because the tariff cuts and the implementation of the tariff cuts, the tax cuts, and etc. We can't forget that the 1st of July we're going to get the rollover for the ceiling, the budget ceiling, right? And that can sort of bring an effect of bouncing back on the US dollar, and we can maybe see a weakening for first few weeks of for 2025. But yeah, most likely we will continue to see a stronger US dollar for until December,
I guess I was trying to say that it's been factored in that he's decisively won, but you're right, the Trump trade is likely to continue for some time.
Yeah, definitely.
Let's talk about what we're seeing in bonds as well then, and the impact there on currencies, because Jay Powell saying, look, we're not in a hurry now to lower rates.
Interesting, because they say that, but the market is predicting another cut right now in the 12th of December. If I'm not wrong, is on the 18th of December is where we're going to be having the next FOMC meeting. And, he say that, we're not in a hurry, inflation is coming down. Indeed, is coming down. We saw the release this week from the CPI. We had the PC just yesterday as well. Somewhat mixed, I would say, the PC, but the CPI is very clear that it is coming down. But we've seen the US, the short-term bonds and the long-term bonds, we can see those precipitating some sort of cut. And I will believe on that because the market has been believed from Tuesday to Wednesday, from Wednesday to Thursday, we had a 20% increase on the market expectations for another 25 base points cut in December. So market was expecting 59 or 60%, and now is expecting 85% of 25 base points cut in December. Is this weakening the US dollar? Absolutely not. So again, this is why the Trump trade gets in power, and we will continue to have strength during the 2024 year.
What happens to the Aussie? Because we've also got the interest rate differential and the growing likelihood that maybe the RBA misses this easing cycle. You know
what? I was thinking about that yesterday because when we think about the first quarter of this year, 2024, feels like it was yesterday, but it was 11 months ago already. If we just refresh our mind, majority of the big banks here in Australia were predicting 4 cuts this year. And there's only another meeting. They're not going to do 4 cuts in the next meeting, right?
They're not going to do any, likely.
They're not going to do any. So the swap differential between the FOMC and the RBA will likely continue. RBA is trying to be, the good guy, trying to hold the rates sufficiently as they can, but the market already knows it's because if they do a 25 basis points cut or a 50 basis points cut, whatever they try to do, this will continue to stimulate consumption, and this will drag inflation up again, and they will be out of control. So between US dollar and Australian dollar, most likely we will see a depreciation of the Australian dollar during this year because the US dollar is so strong. Majority of the flows, majority of the FDIs are moving all the money to USA. we're having rising bonds, and Australia doesn't look too good to put your money here, to be very honest with you, at the moment.
All right, what else is on your radar in terms of big currency moves? Because you've got the yen around 155.
Well, yeah, the yen is a good one, but I do believe on a euro-dollar trade. Okay, I'm looking to short euro-dollar until 104.
Yeah.
I've been shorting euro-dollar since October, when I saw this discrepancy between euro, ECB, and the FMC. Most likely we will see euro-dollar coming down to 104, another 150 pips move, right now trading on 105.30. So if we take this trade into consideration, just touch base very quick on the USD JPY, you've mentioned it. They're not going to do a 25 base points rate hike, the Bank of Japan, and the market already knows that. The market has been knowing that for quite a while, and they tried, I think the time for they to do a 25 basis point, or maybe another 25, another 50, it's past, and they've lost the timing on that, because we saw the Japanese yen being so strong, hitting 160, now down to 140, and now from 140 up to 150. So I think Japanese yen is over for next year, and we may be targeting 170 for next year.